Hi, and thank you for joining us today. My name is Jimmy Connor, and I'm with Bloor Street Capital, which is a corporate access firm based in the city of Toronto. Today, I have the pleasure of introducing you to Tom Kaplan. He's the chairman of NOVAGOLD, and also Greg Lang, the president and CEO of NOVAGOLD. But before Tom and Greg begin their presentation, I want to say a few words. NOVAGOLD trades on both the New York Stock Exchange and the Toronto Stock Exchange under the symbol of NG. It has a market cap of 3.6 billion or 4.8 billion Canadian, and it has 330 million shares outstanding. And with that, I'm going to hand it over to Tom and Greg. Gentlemen, before we begin the official presentation, why don't we just start by telling our listeners a little bit about yourselves and how you got involved with NOVAGOLD. And Tom, why don't we start with you?
Thank you, Jimmy. And I'd like to thank the audience for taking the time out of a rather busy day to listen to the NOVAGOLD story. I hope that Greg and I will make it very much worth your while. My path to NOVAGOLD began actually almost 30 years ago when I got into the natural resources business. I began my career in silver, then PGMs, hydrocarbons, sold everything in 2007 that I thought was economically sensitive, and pivoted into gold. At that time, oil was 120, gold was around 650. The asset that I most coveted was one that I had watched for many years, called NOVAGOLD. I was very intrigued by Donlin. Donlin had the kind of scale and quality that has always attracted me in any of the other sectors of the natural resources market. And I watched the stock go from 50 cents to the 20s. And then I watched it go from the 20s back to 50 cents as a consequence of management's self-inflicted wounds, the financial crisis, and a number of other factors. I was not a shareholder on the way up, and my first purchase was effectively to take over the company in around the $1 to $2 range. And at that time, buying NOVAGOLD was like catching a falling knife. Institutions wouldn't touch it, but I had a lot of experience. My team went about solving the company's problems, and within 18 months, the stock was at $16. My view is that I've been fortunate to be able to discover or take control of some of the greatest assets in silver, PGMs, hydrocarbons, but I've never been able to be in control, at least of half of, an asset that I consider to be completely unique. I'll talk about that a little bit longer. What got me into the company 12 years ago and has only made me even more excited is the quality of the asset. But in 2011, I met a man who has really become my partner in this enterprise, really completing the overall dynamic of our team. I'm an investor with a long-term track record in this space. Greg Lang is an engineer with over 30 years in the mining industry. He's a very modest man, so I'm going to say a couple of things about that before he introduces himself. When Greg joined NOVAGOLD in 2011 as CEO, he asked me whether I would join as chairman. So we both came on together. We went out, did an informational roadshow, and raised $330 million at $9.50 from an informational roadshow. It wasn't planned, but the story was unique, and I think part of that also the dynamic between us. Greg was not someone who went from company to company. He had been with Barrick and its predecessor companies for his entire career. When he joined us, he was the president of Barrick Gold North America for 8 years. He was producing more gold than Goldcorp. So when he came on board, it was a statement because he knew NOVAGOLD, he knew Donlin from the inside out as someone who builds mines and operates them. And I hope that the combination that that's given of someone who's been there, done that in the industry with enormous respect throughout the industry, and someone with my track record, as it is, you know, Fidelity always says that I'm the owner who lives above the store, and this is my favorite story and our flagship gold asset. And so with that, Over to you, Greg.
Well, thank you, Tom. There's not a whole lot left to say about my background.
I knew it.
I'm a mining engineer. I came up through the operating side of the business. I had worked for Barrick or its predecessor companies for almost, well, over 30 years. And, my assignments in Barrick were to look after their Australian operations, which I did for 5 years. And at the time, I also looked after the mines in Tanzania and other far-flung places. And then my last 8 years with Barrick, I looked after the North American business. So, the decision to leave Barrick was not one that I took lightly. I had a great career. The company was good to me. But, the reason I did was actually the Donlin Gold project. I had been involved with the Donlin project from the Barrick side for several years. I was on the board of Donlin Gold, and I was actually part of the takeover evaluations team when we had our unsuccessful run to take over NOVAGOLD. So I knew the asset well, and Tom and I were introduced, and we're very like-minded in what we saw at Donlin. But and I'll go through it in my slides in a moment. But what always intrigued me about Donlin was just simply the scale of the asset. Mines come in all shapes and sizes, but certainly over my career, what I've really learned is the bigger, the better. Once you build a mine like Donlin, it's going to provide any company a stable production platform for decades. And there's just so few like that. And it was really the size of Donlin at 40 million ounces. I've been around a few mines such as Goldstrike or Cortez that ultimately got to 40 million ounces, but I'd never been around one that started with 40 million ounces. So, as you'll see in the slides, it's a tremendous endowment, and 40 million ounces is just the beginning of it. So, that's what really brought me to NOVAGOLD, and I think working with Tom has been a great experience. I think our company needed an advocate like Tom, but we also needed somebody who's been around these large-scale mining operations, who's been through numerous permitting challenges in the U.S. So it was really a great balance of skill sets needed to take this company forward. So it's been a great ride, and we're just really, we position this company for just the times we find ourselves in now. So I think with that intro, we'll work our way through the deck. All right. And I'm sure, as everyone is aware, we do have some forward-looking statements in our materials. The first few slides really just, if you're not aware of the asset, these really introduce you to the quality of the asset. I mean, what certainly we talked about earlier is the size. This is a big gold endowment. The grade at 2.25 grams is, that's where the gold industry was over 10 years ago. And it's that grade that separates it apart from other development stories. There's been a lot of gold mines built in recent years with grades less than 1 gram. So 2.25 grams that gives Donlin higher output and lower production costs than many of these mines with 1 gram head grades. It's still got great exploration potential, and we'll touch on that in the coming slides. Jurisdiction, Alaska. I've mined all over the world, and it sure is good to be doing business back in the United States. And Alaska is a large gold producing region, just second behind Nevada. We've got a great partner, Barrick. A lot of companies like ours in the development space are looking for a partner like Barrick, and we've got a partner. They bring, particularly after the RAND merger, they bring a lot of talent and technical expertise to the party. So, really a great, really position this company well. Leverage to gold price, these are, gold's, it's been volatile, but $1,900 gold is a great price. And, one of the reasons I joined NOVAGOLD was, I wanted to be on the side of the table that had the greatest leverage to rising gold prices. And as a sole asset company, that's really the Donlin project. We've kept this company strong financially. We've got a great treasury, and we'll touch on that a little bit later, but we're well positioned to carry out the next phase of taking this project up the value chain. This slide just compares Donlin to many of the other development stage projects out there. And at 39 million ounces, it's more than 4 times the average. And many of these projects are in some pretty tough jurisdictions, and the likelihood of development is frankly pretty remote. This is what really is an important attribute of Donlin. When we did the feasibility study, we've 2.25 grams were twice where the industry was. And the work we've been doing with our partner in recent years, and we'll touch on that, certainly gives us an opportunity to enhance that grade, particularly in the early years of the mine life. Donlin would be a big producer. It's per the feasibility study, the output would be expected to be 1.5 million ounces the first 5 years, followed by almost 3 decades at 1 million ounces a year. So, big mine in any way you look at it. And the projected output of the other operations is, only 300,000 ounces per year. And I think if you're following the gold space now, I think most of the majors, and certainly our partner included, mines of that size, they're selling. They're focusing on large-scale core mining assets. So, a 300,000 ounce a year mine really is not of that great of importance to any of the majors. They're looking for assets with the scale and the long life that the Donlin project has. And just to keep this in perspective, this shows where the major gold deposits are throughout the world. And, many of them are in some really tough places, and there's only 3 now that produce 1 million ounces a year. And I think that speaks to 2 things. One, many of these mines have been around a long time and their output is falling, and also just how scarce it is to have a 1 million ounce a year producer. And that, I think, really places Donlin as a strategically very significant asset in the gold space.
Greg, I just want to jump in here and ask a question from one of the attendees. How does Donlin Gold compare geologically and technically to Polyus's Sukhoi log deposit in Russia with 63 million ounces of gold, grading 2.1 grams per ton?
Well, I'll break that question into 2 pieces. I'll speak to it on from the technical side, and then flip it over to Tom, because the biggest distinguishing characteristic is we're in Alaska, not Russia. But they're comparable grades. Not a lot has been publicly put out on Sukhoi logs. I don't think I'm really in a position to comment until we see more data on it on its technical merits. But they are comparable scale projects. Sukhoi log is in an extremely remote part of the world, and has, Donlin is also remote, but I would say that Sukhoi log is in an extremely harsh environment. Tom, I would flip that over to you on, I guess, the jurisdictional side of an asset in Russia.
Well, I got a little bit of a chuckle when a few days ago Polyus came out and said that at 40 million ounces they had now the largest gold reserve. I don't think it's an accident that our measured and indicated is 39 million ounces. I know that they read our narrative, and our narrative is that in 1 or 2 phases, Donlin will be the largest pure gold mine in the world. Now, it's possible, we'll see in a few months, whether we have to amend that. As Greg said, if we were to build the mine according to the feasibility study, we would be at 1.5 million ounces for the first 5 years. I'm guessing that Polyus is going to try to come in at 1.6. So when you're in an arms race with the Russians on who's got the biggest gold mine in the world, this is a high class story, because they're going to attract a lot of attention to Sukhoi log. We don't consider ourselves competitors as an investment. I don't think any of our shareholders are looking to buy into assets in Russia. We wish Polyus well. I know some of their shareholders. And I hope that they're able to succeed. Clearly, if people remember that until, I believe, 1867, Alaska was a colony of Russia. The Secretary of State paid $7 million for it, and it was called a folly. So we live in Seward's folly, but it's not dissimilar, and it's not a surprise that the grade and the size are there. If there are two assets competing for the largest gold mine in the world, and one's Russian and one's located in the second largest gold producer in the safest jurisdiction in the world, that's an arms race that everyone can win, but maybe we win it just a little bit more.
And this slide, it really just highlights, the drilling program we're doing. We've just wrapped up an 85-hole program with Barrick. We've had 2 press releases on the results, and we'll touch on them in a minute. But stellar drill results from a very great endowment. And the purpose of this program is twofold. As we've been advancing our way through permitting, we looked at this it was always envisioned as a large-scale bulk mining operation. And as we were working our way through permitting, we looked at it and just said, hey, what happens if we build it smaller, use more selected mining methods with smaller equipment? What does that do to the grade? And 2 years ago, we did a program targeting the intrusive structures, and great results from that program. And it put us on this path of looking at it as smaller, higher grade stage development project. So out of the 80 holes, about half are to validate a new geologic model that we've been working on with our partners, technical people. And the other half of the holes were intended to test for high grade extensions to the areas that will be mined early in the mine life, which of course has the opportunity to increase the production and hence increase the output in the early years when the return on the investment is so critical. We're really pleased that we got this program. We started drilling early in the new year. We had hiatus due to COVID-related restrictions. We were able to resume drilling and get all the holes plus a few extras completed. So we've had 2 results, 2 press releases on the results, and there'll be more coming in the coming months. And this really just highlights, the top 10 intervals from what we've, released so far, and very clearly some of the best results that the industry has seen. Good thick intervals of very high grade. Some areas where we've encountered over 2 ounces per ton in our drilling. And what this is really confirming to us is, yes, the intrusive structures are thick enough and discrete enough that we can mine them separately to enhance the grade. And also the style of mineralization in the sedimentary rocks carries tremendous grades. So these are great drill results, and been very consistent with our new geologic interpretation across the board. We're finding more overall grade thickness, but we're finding significantly higher grade intervals. So we're continuing to release these results as they come in, but they certainly stack up well against what anybody else has drilled this year. And this is, so far we've had assays results and about 30 of the 80 holes come through.
Craig, I actually have a few questions on these drill results.
Sure.
The first one is, how many holes are outside the existing resource, and how are they likely to extend the mineralized zone in the future?
Most of the drilling that we have done to date is within the mineralized area. And, particularly, I think if you look at some of the holes, the first one coming in at 30 meters and returning 40 meters of 11 grams. As I mentioned, that was one of the holes to target the high grade mineralization that we might extend early in the mine life. So, our drilling to date has focused on, almost entirely within the bounds of the existing known mineralization. In our as Tom mentioned earlier, we have an endowment of 39 million ounces in measured and indicated, but we've also got an additional 6 million ounces in the inferred category in and around the known deposit areas. So, this drilling, some of the holes are into these areas where we've had sparser drilling, so they could, they have the potential to upgrade our, inferred resources. But to really answer your question, almost all of this has been in and around the pit. Some of the holes that have encountered high-grade mineralization are drilled just outside the current boundaries of the pit. So, as we rework our models, certainly we're really pleased with what we see, and look forward to updating everybody as the additional results come in.
One more question, Greg. How many holes are infill holes within the existing resource? And for these holes, how do the actual results compare to those predicted by the existing resource?
All right, and we've, I would draw your attention to our press releases that have been out. Across the board, we are encountering thinner intervals, but at significantly higher grade. We're probably seeing maybe 10% less thickness, but over 25% higher grades. So, a net gain from what we had anticipated in the new model. And I think certainly we've got, a big endowment now, but to me, enhancing the grade is far more important right now than adding additional tonnage. So, really pleased with the results they see, and they certainly suggest that the new model is, is good. So we're, I think, definitely on the right track to look at this as a smaller, higher grade starter project. I'll just touch on permitting briefly because everybody can read this at their leisure. From a federal permitting point of view, we have completed the federal permitting process. We have a positive record of decision from the Army Corps of Engineers and the Bureau of Land Management. At the time, that was the first time two federal agencies have issued a joint record of decision, and that speaks, I think, really to the cooperative and thorough, transparent way that we approached the permitting here. So the federal permitting is done. That's one of the things that certainly make this project unique. We have our federal permits, and we've also been wrapping up the remaining state permits. With the 404 or the wetlands permit, that's the permit that authorizes us to begin work at the site, and in federal permitting jargon, to disturb wetlands. So, we are one of the few projects that are, genuinely shovel ready. This slide just, really captures how we have taken this project forward, both up in Alaska and with our partners. The one thing about relationships and permitting, you build these bridges before you need them. And I think that's what's deflected a lot of the potential opposition that some mining projects see. We've always had, having the native ownership is key, especially up in Alaska. We're very engaged with Chalista and TKC. We've got education and training programs to prepare their people for future employment at the mine. We focus a lot on health and safety. I'm proud that we've navigated the COVID pandemic and did not have a single case of COVID at the Donlin project site. Environmental stewardship and corporate governance. NOVAGOLD really is, for a junior developer, we're way out ahead of any of our peers in this regard. Okay. And we've, throughout my remarks, we've touched on the importance of the native corporations and their ownership in Alaska. But I'll just point out that this is, this land was designated for mining activities. The federal government and the state government transferred this land to the native corporations for their economic self-determination. And they're, about the biggest question we get from our native partners is, they just want to see this mine go forward. And it's been all over the world mining, and it's great to be in a place where you're not only welcome, but you're needed. And this is really a timeline for projects as they work their way through discovery, through permitting, and so on. And that really shows where we're at. We're, to us, the permitting, we approached it methodically and transparently. It's good to have that behind us, and we're now at that stage with the higher gold prices, and our partners, I think, been reinvigorated by the Rand mergers. So, we're really, I like the way the company is positioned now. as Tom mentioned earlier, we did our last equity raise almost 9 years ago. We raised 330 million, and our intent was really to position this company so we would not need to raise any additional capital until we go to fund our share of the construction capital. So our treasuries, we've always been very careful with our money. We're a small business. We have about a dozen employees, and you can look at our treasury. This year was a big spending year because of the drill program, and we've got 126 million in cash now. We have another 100 in guaranteed receivables from Newmont related to the sale of our Galore Creek project. We have 75 million coming in next summer, and then 25 million 2 years after that. And we have an additional 75 million coming in if Newmont and Teck make a construction decision on the Galore Creek project. So clearly we've got more than enough capital to fund our share of another drilling, feasibility work, anything. We're in great shape up until we need to fund construction.
I have a couple of questions here, Greg. First off, I think we got a couple of geos and engineers on the line here. The Donlin 2020 summer drilling program seemed to be geared towards additional grade intercept and modeling. What is the timeline for the advancement of engineering, geotechnical, and hydrogeological test wells that are needed for the State of Alaska dam safety permit?
All right, that's obviously an engineer on the line somewhere, Jimmy. The news flow in the coming months will be the balance of the results from the drill program, and that's we were able to get the drilling done, but we found that assay turnaround times are quite slow this year because of COVID. So I think I would expect it'll be either late this year or early next year when all of the assays are available. As the results come in, we're constantly plugging them into the new model. So we look to have the model done really early next year. And and then we may do additional drilling, or we might do additional technical work. But I think we want to get the model done and be satisfied that it's going to stand up. And I think one thing I quite enjoy about Dr. Bristow, he's very, very focused on the geology and making sure that that's an extremely robust model. So it's been great to be drilling. Whenever we drill at Donlin, we encounter better and better grades. So the question on the tailings dam, the tailings dam is under the record of decision from the federal government that authorizes us to build the tailings dam because that was permitted. But up in Alaska, structures like that are administered and managed and overseen by the state. So that's an additional layer of permitting. And to get that permit requires final engineering drawings and quite a bit of geotechnical work. So we've done the basic feasibility level work, but the tailings dam permit's not been on the critical path. So we've elected to do that work concurrently when we move to update the feasibility study. So it will be done when we think the time is right. Right now we're digesting all of the drill results and preparing our work program for 2021 with our partner. And that's something I would expect will provide our shareholders guidance early in the new year when the budgets have been approved.
Another question. If you were to go ahead with a smaller mine and build it in stages over time, does this require new permits?
No, it does not. One thing that we're very careful about is to stay within the footprint of what has been approved. And the permits give you the permission to put in an open pit, a tailings dam, and all related facilities. In the context of the permits, you're permitting disturbances, whether you take 30 years to mine the whole pit or 50 years, it doesn't really change the approval as long as you stay within the context of what areas have been approved for disturbance. Some areas, and most of the permits do not have sunset clauses, and whether you build it half now and half later, it really doesn't have a material impact. It's more of an administrative matter.
Great, thank you.
All right. I think that concludes my remarks. And at this stage, I'll turn the presentation over to Dr. Kaplan.
Thank you, Greg. At the outset, Jimmy asked me about something about my background, and I made a reference to the fact I've been in this business now for 27 years. And over those 20 years, my company's track record, the Electrum Group, has been a 70–80% annual compounded rate of return, focused only on natural resources. Some of those years have been absolutely rip-roaring, and others have been like watching paint dry. But the common denominator of our ability and our track record of having made over 100 times our money in silver, platinum, hydrocarbons, and hopefully gold is focus on assets. In the end, what you want to own as an investor is something that anyone would want to own at a price. And so we look for not just assets that are world-class, but what we call category killers, something that really becomes a paradigm, something that is iconic in its size and quality. I had the good fortune of being able to find one of the biggest silver mines of our generation when I hired a great geologist named Dr. Larry Buchanan. He'll come up a little bit later, so I'm mentioning his name. To geologists out there, Larry Buchanan is himself iconic. His model on being able to identify epithermal deposits at depth is literally called the Buchanan model. Not by him, he's one of the most modest men you'll ever meet. We then went into platinum group metals in South Africa and also made a discovery there. I funded it, I should say, and it's eventually sold to Impala. Same in Zimbabwe. The Kibali mine in Congo, the Kibali project was owned by a company called Moto. I was the largest shareholder and made sure that Mark Bristow got it when he told me that he wanted it. In hydrocarbons, we found the biggest onshore discovery in Texas in 30 years. These were all great assets, really great assets, but they weren't unique. And that's what I want to be able to make sure that you take away when we talk about Donlin and NOVAGOLD, obviously as a pure play on a unique asset. By the way, if you're a shareholder of Barrick, also listen carefully because it's likely that this isn't represented yet in the Barrick share price, but it will be. So there are those who will want a pure play. We're that story. Hopefully you'll conclude a well-managed and a well-run ship on what has the potential to be the new Nevada, or half of it. And with Barrick, you've got a great CEO and a great management team. And as Greg said, we're very fortunate to have them as our joint venture partners. So what is it that we own together? Well, often when I meet with investors, and 99% of the time I myself am on the side of the table of those listening to this webinar, I ask the question, what other gold development stage asset in the industry compares in its combination of enormous size? As Greg said, it's probably going to be, maybe Sukhoi will be the first gold asset to begin with 40+ million ounces when it goes into production. In terms of size, it's really a category killer. The grade for an open pit, as Greg has already elucidated, is very high. The grade is where the industry was a decade ago. If anything, our grade is going higher. Those are just a function of our drill results, while the industry is continuing to plunge. The exploration upside, I'll get to that in a couple of minutes, is, I think, certainly in a safe jurisdiction, probably the best of any major gold asset out there. Probably one could add resources and ultimately reserves to Donlin faster than almost any other development stage project in the world. The production profile, it'll be one of the largest, if not the largest, pure gold producing mine in the world. The mine life is already measured in several decades. That's what's called a company maker. The partnerships that we have with our native corporations could not be better. We're on private land designated by law for mining. There are no use it or lose it provisions. We're in a state that has some of the greatest mines in the world, second largest gold producer in the United States. And to us, jurisdiction is key. I'll spend a little bit of time discussing that as well, because as someone who did, as they say, make their bones in Bolivia, Zimbabwe, South Africa, Congo, when I say that I believe that the frontier era, the go where the gold is, mentality is over, it's not because I'm talking my own book. It's because I wrote that book, or at least I was one of the authors of that book, and I went to the last chapter and I realized it's not a happy ending. You want to be in places that give you maximum leverage to an underlying theme, but also you have to add this corollary now, in a jurisdiction that will allow you to keep the fruits of that leverage. Again, if you're going to have a takeaway, take that one away. Let's talk about Donlin within the context of the gold industry. The gold industry is really challenged. Usually I use more colorful language, but the truth is that there aren't that many good assets out there. Today, the former head of Goldcorp said that we're dealing with an existential crisis for the mining industry. Mark Bristow referred to it as a crisis a couple of weeks ago, and that has to do with reserves. The reality is that the majors are burning through reserves faster than they can replace them. The exploration results of the majors and junior mining companies haven't yielded anything really that moves the needle in the last 5 to 10 years. Even if you made a big discovery, by the time you take something from a prospect to first pour is on average now over 20 years. If you can do that in 12 to 15, it's amazing. So you've got Barrick saying that supply is falling by at least 5% a year for the next years. And I would say, by the way, I think they're being conservative, because I think that projects that were in unsafe jurisdictions will be considered to be uninvestable, and that will only accelerate the decline in production within the industry. So you have supply falling. At the same time, quality has plunged. So grade has collapsed by 50% and is not showing signs of stabilizing. As Greg said, if you're producing at 2 grams a ton and someone else is producing at 1 gram a ton and all other things are equal, the one who produces at 2 grams a ton's average cost per ounce of gold is going to be half. So as grades are falling, by definition, the cost structure increases. And there's also the added fact that when you're producing under a gram of gold, unless that's a producing mine and you've got everything right, the truth is you're becoming closer to a chemistry experiment. Grade is very, very unforgiving. If you don't get it right and you're in low grades, you have a problem. We could literally lose in Donlin the grade of other producing mines and still have a profitable mine. That's an astonishing thing. When the drill program was set out, as Greg mentioned, the target was not to increase tons. I believe we can very easily increase tons. That's not the issue. The target was to increase grade. And the fact that we've been able to see the kind of uplift in grade that we're looking at is yet another differentiator for Donlin, because you not only have size, scale, mine life, you also have a quality for an open pit that is at the top of the league tables. The underinvestment in gold is clearly impeding growth. And as I said, you know what, the truth is that even though I would expect that exploration expenditures are going to increase, as I said as well, the horse has already left the barn. Let's say you find another great mineral deposit out there. It's going to take you 10, 20 years. In effect, the macros that are so favorable to gold are now being superimposed onto a micro environment for the gold mining industry that's really, really appalling. So what happens is you will see a channeling of investment flows, and I'm an example of that. I'm an investor into those scarce great assets which have size, which have grade, which have scale, but are located in jurisdictions that will allow me to ring the cash register one day and won't take it away from me. That is the name of the game. You want to be able to have that asset so that when a broker tells a portfolio manager, we have a world-class asset and a world-class management coming to see you, and the portfolio manager says, that sounds wonderful, just tell me one question, where in the world are they? You want to be able to have the right answer. And candidly, if it's not in a place where you can go gambling, like Nevada, or whale watching, like Alaska, or visiting the Great Barrier Reef, it's going to be hard for people to get their IC to approve that, which means that investment flows are going to give premium valuations to those assets in the United States, first of all, but also, of course, Canada, Mexico, so long as it stays part of NAFTA or whatever it's called now, Australia, and maybe a couple of other jurisdictions. That is the Holy Grail. So I made my career by having fabulous geologists and being a geologist's dream investor, because I have a very, very high threshold for risk. And I know what it's like to get results back from the assay lab that say you've hit and you know you're going to make 100 times your money. Doesn't happen very often. I usually tell people, children, don't try this at home, unless you're very lucky. But how do you factor that into a business plan? One thing I feel very good about is that we have a real shot that Donlin is going to yield extraordinary results. You've already seen a slide which shows that the 40 million ounces or the 45 million ounces of total resources are on only 3 kilometers of an 8-kilometer belt that's mineralized. It's one of the reasons why grade has been prioritized over tons. We feel very confident that step-out drilling is going to yield more tons, whether it's 10 or 20 or 30 million tons or whatever it will be. It's likely to be a very big number. But now consider this, the 8 kilometers on which the pits and that mineralized trend are located on only 5% of the total land package. As a consequence of the failed takeover in 2006 by Barrick against NOVAGOLD, I wasn't a shareholder at the time, but I know from people who were there. Basically, Barrick decided we're only going to do what we need to do because we want to own the other half of Donlin, and why give the management an opportunity to beat them over the head with good drill results elsewhere. But when I sent my chief geologist, who discovered our big story in Bolivia, San Cristobal, to Donlin, after we'd effectively acted as the white knight for NOVAGOLD, he felt that Donlin along the 8 kilometers had the potential to double. But also he said something which was a very pregnant statement. He said, there's a real possibility that the next Donlin could be at Donlin. And so when I look at Donlin, I think that there's a shot. This is the ultimate forward-looking statement, and just assume that I'm full of it. But I think that there's a shot that Donlin, once it's properly explored, and it's given the same kind of review as Nevada has shown, we could be dealing with something that is looked upon as the new Nevada or the new Carlin. It doesn't matter if we don't find any other new Donlin in that property. It doesn't matter. All we know is that as gold goes up, one of the great things that investors want to see is, do you have blue sky? Will you be able to show increased resources at a time of asset scarcity and resource scarcity? And I think the short answer to that is yes. And if anything, the results that we've been getting on the drilling show it's not just about size, but also about quality. Donlin is a gift that keeps on giving.
I want to hear your answer on this next question. As you've already mentioned, you've spent a lot of the time drilling on 3 kilometers of that 8-kilometer strike. What is the blue sky for Donlin?
I can tell you this. I go back to that original conversation I had with Larry Buchanan. You know, when we took over NOVAGOLD effectively on December 31st, 2008, we didn't have time to do due diligence. And I told my team that I'm giving them 48 hours to do due diligence before I write an $80 million check. And they said, you can't do due diligence in 48 hours. And I said, look, here's the story. There are 2 guys in a forest. They come upon a bear. One guy starts to hightail it, and the other one takes his time, takes off his hiking boots and puts on sneakers. The guy who's running looks back and says, what are you doing? And he said, I don't think you understand. I don't need to outrun the bear. I need to outrun you. I said, I don't care whether NOVAGOLD is lying or not. I don't care what the management has to say. Barrick doesn't lie. You've got 48 hours to tell me that Donlin is there as Barrick says it is, and I'm happy. And that's what they did. My chief geologist, Larry Buchanan, I sent him out to visit Donlin after we'd made the investment. And I said, just tell me, what do you think? Is it there? And he came back and I said, so are the 40 million ounces there? And he said, oh no. And my heart sank. And then he said, no. He said, if I'm right, I see 80 million ounces. And it could even be that the next Donlin is a Donlin. And I've been operating on that principle ever since. So take it for what it's worth. I believe that we have a shot of being the new Nevada, the new Carlin, and there isn't a pure play on Carlin, not really. I mean, there isn't a play on that joint venture between Barrick and Newmont, which is really cool, but there is a pure play on Donlin, and that's us. So whether you want Barrick and you want geographical diversification and production and all of those things, or you want NOVAGOLD, it's all equal to us, or you'll want both. But all we need is enough people to understand that they want a pure play on what we've got, and we have the Holy Grail. And that's what I'm playing for. You know, we play for 10x to 100x. And I do believe that NOVAGOLD could go up 10x from here. The beautiful part about the last year and a half is that the gold narrative hasn't only been undertaken by the old guard, people like myself, people like John Hathaway at Tocqueville, now Sprott, who I consider to be the dean of the gold investors. It's now being taken up by generalists, and often for very different reasons. In fact, Mohamed El-Arian, who is as blue chip an advisor to institutional investors, published a piece in the Financial Times in which he essentially said, gold is becoming something to everyone, but for different reasons. And he's right. And that's an extremely important part. I've often said that all roads lead to gold. And I'm not a gold bug. I wasn't a silver bug or a hydrocarbon bug. I'm not a gold bug. I just view it as an opportunity to protect my family's wealth. And because I'm a pro in the industry for decades, to be able to make 10 to 100 times my money through assets. That's what I've done throughout my career. But what you're seeing is you've got really great, smart money, bold-faced names like Ray Dalio, Jeff Gundlach, Paul Tudor Jones, Jacob Rothschild, Paul Singer, Ken Rogoff. I can go on and on and on. Mark Mobius, who are coming into the gold space and urging people to buy gold, and often for very different reasons. This is extremely important. This is not a time for contrarians to say that that's a crowded trade. That's a very smart money trade. Just remember, gold is the most under-owned financial asset in the world. And yes, it's the only financial asset which isn't someone else's liability, which at a time when money printing means that the concept of money is being questioned, you're going to want to own some gold. Even a 1% allocation is going to multiply the gold price. And what's going to happen is this: when gold pops above 2,000, 2,500, people will look back and they'll say, oh, well, why didn't we buy it at 11 or 1200? But the smart money will say, look, that's like saying when the stock market, the Dow reached 2,500 in the late 80s, why didn't we buy it at 1,000 in the early 80s? And, you know, when it's on its way to 29,000, whether you bought it at 1,000 or 2,500, it's not going to make a difference. You're still going to make a killing. And what these bold-faced names are going to do is that when the big money, the big passive money decides to give a 1% allocation to gold, when they're talking about it in their investment committees, they're going to be referencing the bold-faced names and the different reasons to own it, whether it's as a hedge for volatility, whether it's because of the industry dynamics, no new gold mines being built, or whether it's because of its being a currency or low interest rates or money printing, you know, way into the future. You have all of these different hooks on which people will hang their hat, or as I more prosaically put it, I say it's like a buffet. What these people are doing is laying out different dishes for you to taste. But for an asset that's completely small and yet so verified by historical pedigree, this is going to be a tsunami. We're in the very, very early innings of the gold bull market. As I said, there are so many demand drivers out there for investors to choose from asset diversification, emerging markets. There's some who believe you need inflation. Others believe you need deflation. Central banks have gone from being sellers to buyers, and they're the ultimate insiders because they know just how feeble are their reserves. They're never going to be able to sell off what they have on their balance sheet. So the currency debasement is going to continue. The safe haven from, unfortunately, much higher geopolitical risk down the line, but I don't want to focus on the negatives. But as I said, I like to focus on the supply pressures. And the truth is that I can't say it often enough. The horse has already left the barn. If you can buy gold cheaply, buy it. So for us, because I believe that we will see $3,000, $4,000, $5,000 gold without any problem, and possibly much higher than that if certain macro things come to pass. The black swans are already darkening the skies. So what our shareholders want, and I can say that they're very smart money, they want great leverage in a place that you can keep it. And as far as assets go, the leverage that we have, this is just based on the last feasibility study, which was completed at peak commodity prices in 2011, and doesn't even include anything more than the existing measured and indicated. The leverage that we have in Donlin is phenomenal, but most importantly, you're in a place where you'll be allowed to keep it.
Tom, I just want to jump in here and ask one question. I've had a few questions just on the valuation. As we said earlier in the presentation, the market cap is around 3.6 billion US. NOVAGOLD is trading at approximately $165 an ounce in the ground. And they go on to say they use the enterprise value divided by 50% of the total resource, which is considerably higher than any comps. How do you justify this?
There's the best and there's the rest. Not all ounces are considered equal. I've been in this business for 30 years. When people come to you with comps and they talk about gold in the ground or silver in the ground, be very, very, very careful. And it's not because I'm talking my own book. I've been in this for 12 years, and this story just gets better and better and better, while many other stories have become uninvestable, either because of jurisdictional risk. And there are a lot of assets out there which are so low grade that they will never, ever make mines that you can sleep well at night. We could lose the grade of other mines and still have a mine. If forget whether you invest in NOVAGOLD or not, listen very carefully. Not all ounces are created equal. First of all, an ounce in a safe jurisdiction is a real ounce. An ounce in an unsafe jurisdiction, as far as I'm concerned, is a write-off. Then there's the grade. Then there's also size. When you have an ounce that's involved with an asset that will be around for 30, 40, 50 years, it's not the same as an ounce that will be around for 7 to 10 years. So whether you believe me or not, I can tell you this, and please tell your viewers to feel free. I asked that question about Donlin, and I put forward those criteria, and I say, is there another asset in the world which has those criteria? And if not, then it's unique. When you have unique ounces, you have better ounces. But I'll tell you this, I have capital to deploy. A lot of it, actually. My only outside shareholders are sovereign wealth funds, which have been my partners for years. Show me, send me what you think is an asset with a better ounce. I'm willing to look at it. In other words, I'll put my money where my mouth is. I don't believe that there's anything better in the world than Donlin. Maybe if Sukhoi were located in Alaska, people would be saying, well, they're twins. But that's fine. But it's not located in Alaska. And it's not located in places where the rule of law is a novelty. It's not located in a place where when you go to sleep at night, you are not sure that when you wake up in the morning, what you thought you owned, you still own. Now think about it as an investor. So the investor, when he wants to decide to play gold assets, he's going to ask his favorite banker or broker, where can I get a great asset that in principle, I'd be willing to take my family on a vacation? I'd certainly be willing to visit it. I don't want to wake up in the morning and find out that I've just been taken over by stealth, or that there's been an insurgency, or there's been a coup, or where the rule of law has now been shown to have been, just trinkets and beads and a novelty. I made my money in those jurisdictions. I know what it looks like. Woody Allen was right when he said, I'm not afraid of death, but I don't want to be there when it happens. Donlin is perfect for me as an investor, and my track record in the space is one of the best in the space. And I think that with Donlin, I'm better positioned than I've ever been. If you look at our shareholder base, it's one of the bluest of the blue chip in the entire space, producers or developers. Fidelity and Paulson are up there as 2 and 3, BlackRock, Van Eck, Vanguard. We were the first development stage company to be in the portfolio of First Eagle, which are really one of the smartest and savviest investors in the gold mining space. Exor is the family holding company of the Agnelli family. In Europe, our profile is rising all the time. It's a smart money play. And I'd like to consider myself amongst that category. I didn't mention ourselves, but we do know what we're doing and we love what we see. And fortunately, we've got shareholders who feel the same about it. In terms of our performance, traditionally, we were outperforming the GDX, the GDXJ, Barrick, Newmont, and the like. We had a colorful experience over the summer. Since August, we've been climbing back, and I fully expect that our shares are going to outperform the GDXJ. I think that we will be seen as one of the very few go-to development stage stocks that can add octane to a portfolio and not be in a jurisdiction that anyone has to question. That's really where I want to be positioned as an investor, and I have a feeling that others will too. So to summarize, Donlin, size, grade, exploration potential off the charts in a jurisdiction that is one of the best in the world. Similarly, we've got phenomenal partners in our native corporation partners, TKC and Chalista, and also our joint venture partner, Barrick. The leverage to the gold price is superb. The balance sheet, we have over $200 million, $225 million in cash and bankable receivables with a burn rate that could take us for years without having to raise money. We will raise money eventually, but gold will be a lot higher, I believe. And when Barrick is ready to go forward, we have no problem seeing where we'll get our money from, but I expect that our share price will be multiples where it is today. I think we were on our track to be in the 20s which is where the company was in the post-2006 takeover attempt. And then I think we're going much, much higher than that. The management team, first rate. You have Greg Lang, you have Richard Williams, who's running the project, who brought in Pueblo Viejo for Barrick and Goldcorp, now Barrick and Newmont. He's world-class. The entire team is first rate, drawn from Barrick, Newmont, Goldcorp, and multiple other majors. We're permitted. We have our federal permits. The state permits are coming in exactly as planned. And most importantly for me, because this is sort of the side of the business that people expect from me, we have a shareholder base that is absolutely first rate. Not just solid, not just smart, but also with great character and integrity. And I'd like to think, pretty confident, that that's the way that they see our company, as being a company which not only has intelligent people, but also people with character, superimposed on top of the very best gold development asset in the world today. That's NOVAGOLD.
Well, gentlemen, that was a great overview of the NOVAGOLD story. I want to thank you. Greg, I'm going to ask you the last question. What can investors expect to see in the coming weeks and months, just in terms of news flow?
I think the most important news flow, Jimmy, will be updating the drill program as the assay results come in. So I think that will, really take us into the first quarter next year. It will also be updating on, just some of the remaining state permits. And I think probably the biggest news would be, somewhere early in the new year when we put together our joint budget with Barrick for 2021. But I think, the drill results have been, just fantastic so far, and we've released less than half of the assays. As they come in, we'll continue to update our shareholders.
Tom and Greg, I want to thank you both very much. To all the attendees who took the time to sign on and to listen to the NOVAGOLD story, I want to thank you. I know your time is valuable. If anybody would like to have a deeper discussion with Greg or another member of his team on NOVAGOLD, please let me know and I will arrange that. Once again, everybody, thank you.
Thank you to the audience from all of us at NOVAGOLD.